Good evening, this is Rodney with the Triton Wave Market Outlook for Thursday, February 28th, 2013. Alright, let's take a look and see what the S&Ps have been doing. The last update I did, Sunday for Monday, I mentioned that this could slam down all the way to the 55 period moving average, and didn't miss by much, and then I said it was going to come back up here into this zone. So if you just basically if you do a little gerrymandering here and you move this whole area down about 8 points, then you get this area down here and you get it topped off here. It doesn't exactly always work out the way you want it to, but what I'm looking at right now is this wave is still moving down, and this closing prices are still moving down. Now we are up 225. It is 11:45 Central Time on Wednesday evening, and this is for tomorrow, the last day. Friday is the last day of the month, so there'll be some window dressing among other things. If we look over on the left chart here, you can see on the 144 minute cash price for the continuous chart of the S&P Mini. It went down below zero right around the beginning of February, or middle of February. Continued down here. That's the early wave on T2, big wave on T2, early wave on T3, and it just keeps going down, and it just keeps going down. Now it's only like I think like 3 hash marks a day, 3 candles a day on the 144. So they're very slow, very methodical movers. That's why they don't always give you a perfect entry, but they give you an idea of where the entry points are. You know, like you don't, for very slow methodical ones, you do not want to fight something like this when it's coming down. Now you may be a little bit early, but look at what happened. And this one you might be a little bit early on the upside, but look at what happened. And now it's taking it down. So you might be a tiny bit early. You can actually expect this to happen. I expect this to happen. Okay, now correlated with all that, I wanted to give you a little economic and political background about what's going on in the world. Okay, if you recall, about a week ago I did a video and I explained that during the 2010 conference of one of the G7, G20 meetings, Guido Montega, Brazil's finance minister, in 2010 said that we were in the midst of an international currency war. It's something that no one wanted to admit out loud, but they were definitely in it. So he just came out yesterday and said that I think it's the real is now supported. They don't have to discount it anymore because their imports are up. So they were one of the first ones to devalue their currency, and now they're one of the first ones to come out of it. And it's in line with what I pointed out that happened during the Depression. The first people to devalue were the first people to come out of it. So, in line with that, yesterday on Tuesday, during Bernanke's FOMC meeting in front of the Senate, he basically, this is a quote from him: "We're not engaged in a currency war. We're not trading. We're not targeting our currency." The G7 put out a statement which is very clear that it's entirely appropriate for countries to use monetary policy to address their domestic objectives. So what does all this mean? It means that we are in a currency war. We are in a currency war, and Guido Montego was right. And whoever wins this, it's huge stakes. We're talking about hundreds of trillions of dollars of commerce going back and forth between countries, and who gets employed and who doesn't get employed, whose products are sold and whose products are not sold. Well, Italy had their elections this week, and the European news agencies said the best news was that Silvio Berlusconi did not win, because he's had more terms than anybody else since World War II. So what does this mean? It only means that not only didn't he win, but there's no real majority leader in parliament in Italy, and there's no real stable government leadership. And Germany is terrified that Italy will destroy the euro. So as a result of all this unsettledness, Italian bonds fell on Tuesday because of that instability. Okay, so point number 2 or 3 or 4, Italy is also Eurozone's third largest economy, with an external debt of $2.4 trillion. And I believe, don't quote me on this, but I believe it's 125% of GDP. Okay, so you remember the fiasco of Germany bailing out, the ECB bailing out Greece last year, mostly with the backing of Germany. Okay, just to give you a perspective of the trouble that Italy is in, Greece's debt is $583 billion. Italy's debt is $2.4 trillion. That's 400% greater. And if you do not have government backing to straighten out your problems, you see this number over here? When the euro goes down, this baby is going to tank. When everybody wakes up that they're in a short squeeze, and they don't have the margins to keep up with what's going on, and it just keeps on rising and rising and rising, and all of a sudden the balloon comes out of it, and boom, we're down. So don't get too attached to this market on the upside, because there are cracks. There are cracks in this all over the place, especially in the 144. If we look at the smaller time frame ones, something really, really interesting that I don't think that I've ever seen this pattern before. And I've been looking at markets for a long time. Okay, you see these higher highs? Higher lows and higher highs. And that's on the waves. And the waves usually portend the direction of the market. Well, look at this. Lower lows and lower highs. So usually the waves non-confirm the price as the price goes higher and higher and higher. The waves usually go lower and lower and lower. This time it's just the opposite. The price is going lower and lower and lower, and the waves are going higher and higher and higher. Very rare occurrence, very rare occurrence. So the way I'm looking at it, T5 is below zero, T4 is below zero, T3 is just like blipping up like it did here. And this is a major faux pas here. So I'm looking for this just to do this. I'm looking for this to come down as soon as tomorrow, which is Thursday. Oops, where's my arrow here? I love drawing these arrows. Boom, boom, like that. And I think all asset classes will move down. It doesn't matter whether the metals or the only thing that's going to move up in the bonds. And the bonds were actually very stable today in light of the fact that the Dow is up almost 200 points and the S&Ps were up 16, 17, or 20, 20 at one point, 20, 20, I think maybe they were up 20 and had a max of 25. But one of the things I did want to look at was also the, let me see here, let me just get rid of this symbol here and find the VIX here on my symbol chart. Okay, so the VIX, now this is a absolutely wonderful non-confirmation. Higher lows, lower highs and higher highs. Okay, so he's happening 3, this needs one more to happen. But look at what's happening here. This came down right into this area right here. Bing, bing, bing. The 21 period, I'm sorry, not the 21. The 377 exponential moving average, which is this little purple line right there. So we can actually see, because of this non-confirmation here, and this spike up, this was expected, which drove the market up. But now the next move is a bounce off of this, because this is now, once it broke through, came back down, went up. This is now support in this area. So the next move I see is coming right here, because with all this gyration, T4 is still above 0 and T5 is still above 0. So that's what I'm looking at. Okay, Apple on the left chart. Let's take a look at this. I just wanted to show you the bunching that it's doing right in here, and this is all at the this is like 370. This is all the 610 exponential moving average. Let's move this out a little bit, and you can see it a little more clearly. All these lines are crossing. We have this is the daily chart of Apple. We have the 8 staying below the 21, and they're both crossing right there. As of today, this crossed the 610 exponential moving average, which is huge. I don't think anybody uses that moving average. Okay, this is below 0. All these below 0 here. Bing, 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 across the board. So the next move I have, once this all clears away here, the next target on Apple that I see is right here. The 987 average. The 987 moving average. Okay, so 387 puts you right in this line of tops right here. Puts you right in there. So that's perfect. 387. So where are we now? 434. Go out a month. Go to March, April, and buy yourself some out of the money puts. You can expect this to move right down that direction. It may zigzag a little bit, up, down, but it'll get there. And there won't be any significant bounce until this happens. And then you could actually see like a 50, 60, 70 point bounce back up to this area, because it can't go down forever. It's not gonna, I mean, it's gonna go down, but everything has to breathe, you know. Okay, on the 21 minute, it's kind of can't really read it because it's kind of a little choppy here. The waves don't give you a good explanation of what's too good of explanation on the 21. So in this case, we go down to the 1597 because it's a very active stock. Oh, is that not going to populate for me? Hang on. What have I got here? Oh, it's timing out. Hang on. Okay, I wanted to show you on the 987 tick chart of Apple. The 1597, the Apple didn't move fast enough to be part of the 1597, but the 987 shows up really nicely. I wanted to show you this move that happened the other day. This was on the 25th. What is today? Let me see. The 25th was on a Monday. So this is what happened on a Monday. We had this move down, and it looked like Apple, it really looked like the shit was hitting the fan right here. Down, down, down. And it started right here at about 451, and then it continued here with another sell signal, 448. And then with another sell signal at about 447. And then these guys just went down. Boom, 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 boom. Just continuously. So you can see where the waves went below 0, T1, T2, T3, T4, and then T5. And it looked like it was just going to collapse because over on the left here, it was collapsing, and everything is like down below 0 here. So on these waves, what I love about these waves is that right here, right about at 10 o'clock, after Apple was down already 10, 12, 13 points, it moved up right at this area, right here, and almost on the dead lows at 437, and then just like took off. This entire move right here came from this move on the wave. Now, wave 2 confirmed it, T3 confirmed it, T4 confirmed it, and T5 confirmed it. A move like this, a day down, you keep it till the next day, till 10 o'clock in the morning, and a move up like this, this will make your month. So right now, it's kind of a little bit sloppy here. It was down 4 points. You got to really, when it starts going choppy and sideways, you got to break it down to like, here we go, like a 610 chart, and even lower than that, you can go at 144. Let me see what that brings up here. You know, if you really wanted to fine tune this, this is the beginning of the day way back here. Let's just expand this chart here, so you can see what a whole day looks like. Okay, so this is a whole day, and you can see there's lots of like 448 down to 445. There's lots of 2-point plays on this. Bing, bing, up, down, up. Let me see here. Let me get an arrow so you can see what I'm talking about. Okay, up here, bing, down here, down here, up here, right here, down here. So, I mean, you know, like if you wanted to be in and out of this all day long, you could really have a lot of fun with this. Right now, this went down here at about 155 today, at 450, closed at 443, and just kind of boom, tanked. And this never went above 0 this whole way through here. So it's not, and these are all down below zero. So this is not looking good for Apple. All right, I want to take a look at one more thing. Take a look at some gold and silver. Let me bring up the charts. So I wanted to take a look at gold. For those, I haven't really shown gold that much. I have this. I do some consulting for private clients where I'm doing gold and silver. So I can't give you a prediction on gold, but I can tell you what we actually did in the last week. If you want to participate, just get in touch with me. We had a sell right in here, cover and go long right here, a sell in here, and then I'm sorry, a sell in here and then another buy that took us into this area. So between this was a 75-point move, this was a 20-point move, and this was a 20-point move. So basically it's 20 and 20 is 40 is whatever that is. 115 points on gold. Obviously they are celebrating big time. If you would like to be a part of this, just get in touch with me and I will give you the details in a minute. Alright, if you want to get in touch with me about gold or any of your other needs, please contact me at Rodney Julian at tritonwaveguy@gmail.com. This is my name. It's a little squashed up right here. And I am doing gold and silver only for private clients. So call if you want the next target. If you want the next target and the next signal when it comes up. That's all I have for tonight. Have a great evening. Have a great trading day tomorrow. Last day of the month. Should be very interesting. March 1st, March Madness, sequester, trillion-dollar debts, Italy falling apart, bonds going up. Oh, incidentally, bonds had very little movement to the downside today with this huge up market. So that is a sign that this was just a short covering, and that was it. So be careful out there. See you at the next update.